Hello traders, welcome to the channel. Welcome. So today, as you can see on my screen, right, I want to talk on the 2 habits quietly destroying your trading account, right? So most of the videos I want to be posting on this channel are like my personal experiences with the market, right? Things that I went through and I had to fight. I literally had to fight. So these 2 habits I'm about to talk about today, it's not something that you don't already know. Most likely you already know about it, right? But you never really thought that this could cause you to stay unprofitable, and this could also cause you to be profitable, right? So you wouldn't really know that, oh, this is because of some of your problems if you don't pay attention to it. So without wasting much of the time, let's start the message, right? So one of the habits, right, okay, before we go into the thing proper, like I want to say this, like, trading is not about being right every day, right? It's just about surviving in the market long enough for your age to play out, right? So the moment you start quietly applying these 2 habits without even knowing or without pausing to think that this might be the cause, right? So most likely you would stay unprofitable for the longest of time, right? So let me just write down the 2 habits, right? So these are the two habits. One of them is inconsistent risks. And number 2 is adding position. Without context. So number 1 is inconsistent risk, and number 2 is adding positions without context. As simple as this may sound, right? Before we round up this video, probably you would have an insight as to why these two habits are quietly making you to blow your account, destroy your account, and the rest of them, right? So now you don't need a bad strategy to actually blow an account, right? A lot of people just blow accounts by applying these 2 habits quietly, and they don't even know, right? So trading, like, let me start by saying this: trading is a numbers game. So if you were someone that back then you didn't like math, right? Back then when you were in school, you used to struggle with math and the rest of anything that has to do with calculation, right? You don't want to be you don't want to be found there. You're not interested in such activity, right? Anything that has to do with calculation. So, and now you are coming to trading. And not like you need much calculation here, but and now you are coming to trading, and probably you are bringing that mindset, and anything that has to do with calculating lot size is stressful. This one, like, man, you need to chill, right? So trading is a numbers game. It's really a numbers game. So what I would say is, immediately you get an account, before we go into talking about them, right? Immediately you get an account, immediately you buy an account or you fund an account, whatever figure is in your account, immediately that money is in your account. Number 1, you should be ready to lose that particular money that you just funded. Or if it's a prop account, fine, you should just understand that if you don't pass the account, it means that you are going to lose the account, right? So you should be like ready to lose the money. First things, immediately you fund your account, you should be ready that anything can happen. Remember the previous video I talked about being patient. Like, you need to truly accept that the market can do anything. And please, if you've not watched that video, please just go to my channel and click on the video, and you will get more insights into what I'm saying. So you have to you really have to keep that mindset aside, right? And understand that trading is really a numbers game. and the numbers has to add up for you to be profitable. The numbers has to add up for you to be profitable. So one trade almost means nothing. Like I said in the previous video as well, some traders take losses and they are overwhelmed. They can't even do anything the whole of that day anymore. They are just overthinking, like they are disturbed. They have anxiety issues. Like they are not calm, just because of that one loss. And I gave the reason as to why you are feeling that way in the previous video as well. That you are only feeling that way because you are only feeling that way because most likely you overrisked. Most likely you overrisked, right? So, and that's why I'm coming with this video. It's like, I wouldn't say part two because this is like a different topic on its own. So one trade should not mean anything to you actually. You should judge your performance between 50 to 100 trades, 30 to 50, 50 to 100 trades, right? Performance with data. That's why take your screenshot. Immediately you spot your setup, take your screenshot, journal your trades as well, right? Journal your trades as well, and at the end of 30 to 50 trades, if you follow your plan judiciously, you would know if you are profitable or not, right? So some people are actually profitable. A lot of people are actually profitable. I tell you, I battled with these two habits for the longest of time, and I didn't even realize that this was what was sabotaging my account. So imagine going to a casino to play what they play there, like they gamble in casinos as well. So like even the casino, they don't change their rules every hour. They don't change they don't change their strategy immediately after they take one loss and the rest of them. Like so like they have a consistent plan, risks and everything that they actually follow. So let me relate that back to trading. Let's start with the first killer of your account. I will start with adding position. Let's just start with adding position. So adding positions. This is the first issue. Adding position. So like under this context, I'm going to be talking about revenge entries. Now, what do I mean by revenge entries? Sometimes you've actually taken your trade, and let's say your trade hits stop loss, right? Most likely you start looking for another pair to trade immediately. What makes you think that pair that you are going to now, you will not take a loss on that one? You are not even following the pair. Remember, every pair actually has the way they move. Even if you can apply your strategy on most of them, but like they actually have the way that they move, right? So revenge entries simply means that you take a loss and you cannot sit with the loss. You start adding positions. Remember, like I said, immediately you get an account, you should have a plan for the account. And before the end of this video, we are going to go into all of those things proper. So you start adding positions. Just because you took a loss, your mind is not at rest, forgetting that this position that you want to add now, you did not plan to lose this particular money. Like, because as at that point, you won't even think, you won't even be thinking properly anymore. That particular money that you just risked now, you didn't even plan it. You didn't plan to lose it, or you just jumped in. Probably increase lot size more, risk more. That way now the numbers are not adding up on your account. Another thing I want to talk about is overconfidence. So under adding positions, number one is revenge entries. Number two, overconfidence. So sometimes this overconfidence can like make you to add more positions when it shouldn't be so, because you took 6 trades and you had 6 wins in a row. Suddenly you think that you are the owner of the market, right? You think that you are now a market maker, so you go into your next trade. You used to risk little, you're now going through your next trade and end up over risking, and probably that particular trade now ends in a loss, and you've wiped out all your weeks of hard work, all the trades that you took calmly, you took calmly, you held the trades and everything. Suddenly you've over risked and the trade went bad, and you've wiped out your account, wiped out your month of progress, and you start feeling that the market is against you. Like, sit with yourself, ask yourself, is this really the market's fault or mine? If you've truly accepted that the market can do anything, as we said in the previous video, meaning that you understand that the market can come back and hit this your stop loss, why are you adding positions when they are not planned? Like I said, without context. I'm not saying adding positions is bad, or I'm not saying you won't be profitable. I'm saying if you are struggling with not even seeing any profit on your account, you should actually try this, right? So stop adding positions to your account. Then just stop. Number 3 thing I want to say: stop stacking trades because the setup looks good. Stop. Stop stacking trades because the setup looks good. Actually, just stop stacking trades because you saw that your setup is looking fine. Everything is looking aligned. Suddenly, let me add more risk. Instead of adding more risk, think of it this way: what if it actually comes back and hits my stop loss? Now, the money you were supposed to lose, you understand what happens next. The amount you were supposed to lose, suddenly you end up losing way more than what you were supposed to actually lose, right? Let's go into the second option, which is inconsistent risk. Inconsistent risk. Okay, so there's nothing really like, let's just go into inconsistent risk. So by inconsistent risk, I simply mean that once you get an account, right? Once you get an account, you should sit down and you should understand your risk to reward ratio. You should understand how many pips your trades usually runs. Like you should understand where your take profit is. Like, what is your risk to your reward ratio? You really have to understand that so that you can keep your risks consistent. So a lot of people, they know that they have a risk to reward ratio of up to like 1:3, 1:5, right? Yet they keep risking small amount here. The next trade they are adding a little risk on top. Then the next trade they are opening a very huge lot. Like I said, trading, let's write this thing down. Trading is a numbers game. So you have to play the game in such a way that your own numbers are actually going to add up. Like I said, you really need to like math in school. I'm not saying you can learn math, because that's not what is going to make you profitable, right? But understand that if you cannot keep your risk consistent throughout those series of trades, then you are not going to allow your edge to play out over time. It's as simple as that. If you cannot keep your risk consistent, okay, if you've agreed that you have to allow your edge to play out over a series of trades, like I said, 30 to 50 trades is fine. That's good data. 50 to 100 trades is fine. That's very, very good data. So if you cannot keep your risk consistent today, okay, let's even go into the main thing practical. So let's assume you have $500. So let's say this trader has $500 in his trading account, right? So let's say this trader has $500 in his trading account. Let's write a capital. So your capital is $500, right? Your capital is $500. So what I meant by immediately you get an account, try to divide the money, try to divide your capital into a certain number of trades. So now let's say this $500 now, I'm ready to risk $50 per trade. So let's say risk per trade. The capital is $500. I want to risk $50 per trade. So now that I know how much I want to risk from this money, I also know that to blow the account will take me 10 losses, 10 straight losses, 10 straight losses to blow the account. We are planning the $500 capital that we have. So I want to risk $50 per trade. So the risk per trade is going to be $50. So I know that total. So I know that 10 losses. So I know that if I take 10 losses in a row now, it's going to wipe out the account. Okay, good. I'm aware. We are planning the $500 capital now. So we know that 10 losses in a row is going to wipe the account out. So now, let's say we are going to have two scenarios. We are going to have two scenarios. So let's say scenario 1. So scenario 1. Scenario 1. So let's say we first trade loss. Well, I don't even want to type all of this, just listen, guys, let's just talk. So like the first scenario, the first trader, scenario 1, first trade loss, the account is down to $450. Second trade loss, the account is down to $400. Third trade loss, the account is down to $350. And then let's say you have like a 1:5 risk to reward ratio, and then your next trade goes your way, right? And you hold it to your 1:5. You would recover all your 3 losses, and you would have like extra $100 on top, profitable even after 3 losses, just by keeping. Now don't go and change the risk because you've taken 2 losses in a row. Okay, let's still focus on this scenario. Assuming the trader took 2 losses in a row, and then the third trade, he now decides to risk $20 per trade. Now the trader would have recovered the account and he will still be in profit of over $100. We will now give him 1, 2, 3, 4. We'll now give him just $100. If you risk $20 and you have a risk to reward ratio 1:5, you will now give him just $100. Something that would have recovered all the account. So you don't change your risk after the loss. You don't change your risk after 2 losses or 3 losses or even 5 losses. If the trader has, even if you take 5 losses in a row, but you know that, okay, let's say you have a risk to reward ratio of 1:5. For the context of this video, I'm just going to use the risk to reward ratio of 1:5. So if your risk to reward ratio is not 1:5, you know how to calculate the number so that it will be in your favor, right? So even if the trader loses 5 trades in a row, the account will be down to $250, right? And imagine he now wins his next 3 trades only. Do the math for yourself. Imagine he now wins the next 3 trades. So you don't increase your risk after a win. You don't also increase your risk after a loss. Once you get an account, plan the capital that is in the account, and execute. Now let me relate this to adding positions. Assuming you are in a trade already, trade is going against you, you now added another position. You have invalidated the plan that you had for that account, because you told yourself that you were going to take 10 of your setups with this $500, and if you lose 10 of your setups, that is when you accept that, oh, you are wrong, the account is gone. But the first trade alone, you reach $50, fine. The market now dug into your drawdown area, suddenly you've added another position, probably risking $20 on that particular position. The numbers are not going to add up. And now let's say you now take a loss eventually on the pair. So the numbers are not going to add up, right? So like at the end of the day, you were supposed to lose only $50 on the trade. You've ended up losing $50 and also losing $20. So in total, you've lost $70 on the trade. Now your next trade that you were supposed to risk $50, you still risk the $50, but remember your loss. You've already lost $70, more than what you plan to be losing per trade. So inconsistent risk and also adding positions, they are like very, very dangerous to your trading career, right? So like you really have to understand the concept behind it. So let's go to another scenario. The trader is not keeping the consistent risk. Today he's risking $50 on the trade. He has already had a plan that he's going to risk $50 per trade, and then today he now decides to risk $100. There's always that little spirit. There's always that devil voice. I wouldn't really call it the devil voice, but there's always that voice in your head trying to let you. Just add a loose position so that once it goes your way, yeah, you'll be having so much money reading on your MT5, meaning that you've not accepted that the market can really do anything. So you think that you own the market because it's looking like to go your way. So what if it eventually retraces and comes back to your stop loss? The money you were supposed to lose, you've lost more than what you were actually supposed to lose. That way the numbers are not going to add up. Trading is a numbers game. Please, like, you have to understand this. Trading is a numbers game. So what is the solution to this? I've come up with a simple solution, very simple solution. As simple as this may sound, this is the only solution you need. So just set limit orders, actually. That way you have the time to plan the trade. Place the limit order where you want to take your entries, place your stop loss, adjust your stop loss to suit the money that you want to risk. Adjust your stop loss to suit the amount of money that you are ready to lose on the trade. So just set your limit orders and make sure you predefine your risk before you enter the trade. It's as simple as that. Nothing complicated. Nothing complicated. What I mean by predefine your risk, even if you want to do instant execution, that means you want to go into the market when the market is moving, right? If you don't calculate the lot size properly, I mean, the numbers are not still going to add up at the end of the day. So that's why I'm not saying instant execution is bad, or those that are executing their trades at the moment that the market is moving, they don't know what they're doing. No, that's not where I'm coming from. I'm only saying if you have a problem with this, if you know that you are struggling with keeping your risk consistent and you are struggling with adding positions without context, then this solution is actually for you. You can try this for for a while, right, and see how it will help in your trading career. So this is a simple solution. Just set limit orders before the trade, before the market even comes to your entry. So that way you are not even really worried about whatever can happen, because the worst that can happen is for you to lose this social amount that you have allocated to that particular trade. That is the worst that can happen. Now I'm also aware that firms like Goat Funded, like sometimes even if you set your limit orders and you've defined your risk, sometimes if the market is very, very volatile, they tend to like still charge you more than like the money that you decided to risk on the trade. So I'm aware of all of those things, but then there's really no excuse, right? This is just something that you really have to understand. So we started off by saying, if you didn't used to like math back then when you were in school, this industry, you have to like have a little idea, right? Just know how to calculate, plan your trade, rather plan your capital, not just going into random entries, risking anyhow, just trying lot sizes here and there anyhow that it suits you. That way the numbers are not going to add up. So if you keep your risks consistent, even if you lose 2 trades in a row, 3 trades in a row, once one of your trade clicks, that should be able to get you back into profit, and that should be able to recover your account and also get you back into profit. So that is just a simple solution. Like define your risk, then know how much you want to risk per trade depending on your capital, right? Your job as a trader is not to force trades. It's not to force money from the market. The market doesn't owe you anything, right? Most of you have actually cried from this market. I've also done that as well. I mean we all do this. So like the market doesn't owe you anything. So the moment you start understanding that, okay, the market doesn't owe me anything, I just have to learn how to play the game, and this is how to play it. Keep your risk consistent. Don't increase risks because you have like 5 win trades in a row. You now on your 6th trade and decided to like increase the lot size, because that could actually wipe out your month of consistency. So these are like the 2 things that I've noticed that it's really messing the numbers up in my account as well. Though I've been able to like train my mind and understand that, okay, no matter how the setup looks good and the rest of them, I'm not going to add any position. So if trading is truly a numbers game for you, then protecting your capital should be priority. Protecting your capital should be priority, right? So with all this being said, I'm just going to end this video with keep your risk consistent and don't add positions without context. Or sometimes you really want to add positions. If you wanted to risk in this context, let's say you wanted to risk $50 on the trade, you could divide this same $50 into 2. Let's say if you want to add position, okay, let's say let me risk $25 now, and then if the trade comes back to my entry and I still feel like I can add another $25, that way no matter what happens, you will still lose the range that you wanted to lose, which is $50. So that's why I said without context. Adding position without context, very, very dangerous. So if you understand the context behind it and why you want to add positions, fine. But for me, what I love to do is I just set whatever I want to risk on the trade at once and leave it and allow the trade to play out. Just set whatever. So like, just set whatever I want to risk on the trade and allow the markets to do its thing. And then in my head, I'll just say, what's the worst that can happen is for you to come back and hit my stop loss. And if you come back and hit my stop loss, I've already predefined my risk. So that way, I don't get to feel FOMO. I don't get to want to revenge trade because I've already predefined my risk. I've already accepted that you can come and take my stop loss. So with all this being said, we'll just end this video here and see you on the next one. Peace out.